It's still firmly in focus because of its real usage, dominant position in decentralized trading, the ongoing debate around activating a fee switch that could direct protocol revenue to token holders, and the simple fact that DeFi blue chips remain core to the broader market narrative. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on Uni. I actually read them. What's going on with Uniswap right now? The chart has been under pressure for a long stretch. Sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Uniswap is the leading decentralized exchange protocol, best known for pioneering the automated market maker model that lets anyone swap tokens without traditional order books. It operates primarily on Ethereum and has expanded across multiple chains, powering a huge share of on-chain trading volume. Uni is the governance token that lets holders vote on protocol upgrades, fee switches, and other key decisions. It currently ranks near the top 30 by market cap with deep liquidity and significant daily volume, and the price has been trading near the levels you're seeing after a multi-year decline from previous cycle highs. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to outright negative for an extended period. You'll see a mix of hold and sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets have flipped around, but the short term outlook from pure chart based sources remains defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is far more coverage for Uniswap than for lower ranked names, but the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. Here's the real debate. Is Uni actually undervalued at these levels, or is this a value trap after years of relative underperformance? One side points to the real trading volume the protocol continues to process, its dominant position in decentralized exchange activity, the governance utility of the token, the potential for a fee switch that could create meaningful value accrual, the distance from previous highs, and the idea that blue chip DeFi infrastructure could re-rate if capital rotates back into the sector. They argue that if usage stays strong and value capture mechanisms activate more meaningfully, these levels could look reasonable in hindsight. The other side says look at the chart and the market structure. Many DeFi tokens have struggled to hold value once the initial hype faded. Volume and momentum have been soft for long stretches. Competition from other DEXs and aggregators has intensified, and the market has consistently treated Uni as a lower priority name despite the underlying protocol activity. That's the classic trap setup. The technology is real, the protocol continues to operate at scale, but the market keeps assigning it a lower valuation while attention stays elsewhere. Retail often gets caught here, buying the undervalued DeFi blue chip narrative while the larger trend remains downward or sideways. On the technical side, the bigger picture remains a clear long-term downtrend from the much higher levels reached in previous cycles. Price has spent extended periods making lower highs and lower lows, with recent action testing support near multi-month and cycle lows. Short-term bounces have occurred but have consistently failed to reverse the larger structure. Momentum indicators have been mixed to weak on the higher time frames, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the daily and weekly still lean bearish, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is some resilience when price holds the recent lows, but the overall structure still looks heavy. Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns, protocol volume stays robust or grows, governance activates stronger value accrual to the token, and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate highs over a longer horizon. Worst case is the opposite. Volume stays muted relative to peers, players, relative performance continues to lag and the downtrend simply grinds lower toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform. Risks are meaningful, volatility is still present. A broader risk of move in crypto or continued rotation away from mid to large cap DeFi tokens can pressure the price further. Downside remains open if the recent support zone breaks and the downtrend simply continues. Retail traders love the long term Uniswap will capture more value story and end up holding through multi-month or multi-year underperformance. Liquidity is excellent compared with most names, but that doesn't eliminate the possibility of sharp drawdowns. There's also the competitive risk that comes with any DEX. Newer protocols, better user experiences, or shifts in trading volume can continue to pull mindshare and activity away, and the fee switch mechanism has so far not delivered the sustained value capture some holders hoped for. Nobody knows which way this resolves. The chart is still fighting the technology narrative, the protocol continues to process massive volume, and the market remains selective about which DeFi stories it rewards. So the real question is simple. Is this the kind of project that can finally break out of its long underperformance and re-rate higher? Or are we just watching another established DeFi blue chip settle into a prolonged period of low relative interest while people argue about valuation? Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short-term bias flips with any real confidence. Longer term, it comes down to whether Uniswap can convert its dominant trading activity into sustained demand and relative outperformance for the UNI token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower.